Okay, this is American Contractor. Today is January 1, 2016. Great headline today. Finance. Iraq revives plan to sell bonds, $2 billion in 2016. The word on the street that I'm getting is that you're going to start about March, April, maybe May, about these bonds. A little too long to wait for me. They should have been started this a long time ago. They did have a scheduled October of last year, 2015. Bonds, but Euro bonds, but the Iraq government backed out of it because of the high interest rate was 11%. Now let's go back. This is the article I wrote. Central Bank of Iraq has new plans for the Iraqi dinar in 2016. I wrote this December 26, all right, about 5 days ago. If you scroll down here to the bottom, right here, the Iraqi Ministry of Finance was highly upset that the Iraqi government had backed out of a 2 billion euro bond issuance in October 2015. That would have been helped in shortening the deficit gap. The reason the Iraqi government was forced to back out was higher interest rate required by the market. The market the government did not like the high interest rate. A lot of the gurus out there said, hey, this is not true. This is a bunch of BS, whatever. But I guarantee you, folks, if you're listening to this and the American Contractor is saying that is 100% true, because I have vetting mechanisms in place that I make sure my information is correct, because anything come out from the American Contractor gets a little more scrutiny than anybody else. But I guarantee you that my information is always correct. Like I said, read this article here. Central Bank of Iraq has new plans for the Iraqi dinar in 2016. If you haven't read that, please do so. Now let's go back to this article. It's dated right here, December 31st, about 4 days after I wrote mine. And if you scroll down here to, and it was suspended bond sale plan. It's talking about the Euro bonds in October of last year. The first of its kind offered by the Iraqi government in the international market by about 10 years. Remember, they had a bond sale 10 years ago. Now, in October, as investors demanded a yield of 11%. So they backed out of that one. It was just too high. And there it is reported in there, right there. Zabrari said the 2016 draft budget provides for the government to sell bonds, $2 billion if lack sources of funding for the targeted spending, adding that the government hopes to conclude a better deal if you decide to resort to the bond market in 2016. They did sustain some victories right here, sustained on the government, on the terrorist organization in support of the World Bank and fund. They say the fund there, talking about the IMF. Hopefully they'll get this bond completed. They'll get some investors to invest in Iraq. I don't understand why the interest rate was so high at 11%. It's kind of high to me. I think the normal going rate is around 6%, 5 to 7%. I don't understand why it was 11. But maybe they see more risk in Iraq now than it was, 10 years ago. But this is the Iraq revised plans to sell bonds, $2 billion in 2016. If you like this video, go ahead and share, like, comment, send me an email, send me a text, and we can continue on with the discussion. But as usual, American Contractor is right. There's a reporting. And just go ahead and read that article if you have not read it. It's a very, very good and telling article.